Hello friends, welcome back to the show. And Bitcoin is still in my thunder. So if I just take a look at the charts here, you can see that the prices have dropped down over the period of the last hour here. This is the CME chart I have open behind me to fill in this gap. So I was actually going to make a video there about, I just kind of started making a video earlier about this gap, saying, hey, we're going to fill this. And then I decided what I would do instead was have a cup of tea, because as I was making the video, the prices dropped right on down there, and there's very little point in me putting that video out there. So here I am back again, starting all over again. Cool, nice one. So what's happened with the prices? Well, what I was going to say is, hey, we've moved up here, but as we're looking at this little bit of price action going sideways just now, got asked the question, are we ready for this 12,000 area yet? Are we going to see a pullback, etc., etc.? And in what forms could that pullback take? And the first area to look to was, of course, where this gap is, which is then coming and being filled. If I just drop down the time frames, you can see, well, that just happened there, as I was saying a wee while ago. And then subsequently, we've seen the prices rise back up to 11,820. So they actually went down as low as 11,640 over here on the CME charts, and that has indeed filled in this gap then that we had on the hourly, or on all the time frames down, I suppose, apart from the 24-hour and stuff like that, which was what I was going to be saying, like, hey, we've got a couple of gaps on the chart, are we going to fill them, blah blah blah. There isn't one on the 24-hour, but there is on the hour. Maybe we'll fill that one in, and we also have this one down below to be looking out for. So that's the question, are we still in this really big uptrend, or that we've been in, or are we maybe going to see something stall for a little moment? And the question then becomes, now that we've filled in this gap towards the top side in around this area, and the prices now find themselves back right at where that gap was again, kind of more or less, 30, 40 bucks away from it as we speak, that we can tick this one off now. And are we looking at this as needing to be filled before a big old bull run kicks off? And if people are feeling quite enthusiastic about the prices, which of course they should, having been in a bull trend now for 6 months, we should look to this and say, is this where we're going to see a pullback to at some point? And if it is, how horrific would it be if the prices were to go up much higher before pulling back, and that sort of a thing. So we can always keep in mind, but of course, like I said in so many episodes now, well, it's an uptrend. And you should read that book, by the way, Reminiscences of a Stock Market Operator, or Stock Operator, or something like that. I'll maybe put a link to it in the description at some point, or whatever. So anyway, that's that side of things. So that's the question to ask. And are we looking at this and saying that we've got this kind of upward channel here that we're in, and everything's kind of groovy-tastic, and we have that flag on the other charts that we'll check in, the pitchfork that we'll check in with in a second. I'm sure you'll be excited to see how that all panned out as well. So are we in this channel here, and is it going to be part of the what we call the half staff bull flag pattern, where eventually then we see a rise up again, which is similar to the one that we had before, in terms of the flag pole, and just stick us on up and look up to things like, up towards the 13,000, 14,000 area and say, hey, that's the next step up? Is that what's going to happen, or are we eventually going to see us come down here and perhaps potentially fill in this gap then down below? Right, that's still what we're talking about, but still half staff, that would be what we'd be looking at in terms of the bull market, and that's still kind of the case at the minute. Let's just jump on over and take a look then at not this one, this one. This is where we have this pitchfork on the go. Okay, so let's just take a look at it and how is this constructed and whatever else, I suppose. Well, not explain the details actually, but we have this pitchfork on the go, and what we were doing in previous episodes you might have been seeing was we were saying, are we going to be in a original shape pitchfork from this moment on, and we had laid out kind of areas and price targets to be aware of and all the rest of it, or are we going to be in in one of the other types, and we looked at them with those targets too. And it's uncanny how this has worked out over the weekend, so that's quite lovely. Just taking a look here, then changing over to, well, actually no, we'll start off on this one. We can say, look, so far, in today's price action, we've seen the prices be as high as 12,110 over here on BitMEX, and that's put it in right at the very top of this between the warning line and the lower line here on the pitchfork, and that's quite significant because we've actually seen the prices drop down below and come down and go towards our serrated blue line again as well. So in terms of profit taking and trading and everything else that you could have been doing over this wee while, we've seen already a solid 5% move today in the price action as a result of all of this. So, and that's left us with this doji candle, which is positioned just outside of the pitchfork. Where exactly is that positioned? And looking in, zooming on in, you'll remember as well, if you've been watching the recent episodes, that we've got this symmetrical triangle on the go, and it's come back within this area. So if you had been looking at this and saying there is a breakout or a potential breakout from this triangle that we spoke about in El Pasto, then you'll remember, maybe I should make the colors a bit brighter so you can see them a bit better. There's an orange or some sort of color like that. So you can see there, right? So if you've been talking about this, what we like to do on the show all the time really is kind of look up to where the previous highs were in terms of what we could consider to be a sort of fake out from a symmetrical triangle like this, or indeed the sort of the measured move having accomplished itself and then no longer needing to be up at those prices before perhaps coming back down and retesting areas that we were in before, such as where this line currently resides, and that's in there 11,700. Excuse me. So that's where we are. That's interesting, is it not? If we were to have done the measured move jazz on this guy, you could have been looking all the way up, for instance, to we were kind of talking about on the CME charts over here at the 12,800 area, which would put the CMEs in about that 13,000 area. Sure, it would. Of course, it would. And then you'd be looking here towards this median line of the pitchfork, yada yada, all that sort of positive stuff. And we spoke about all of this back over here and about the numbers and the way they're going up and everything else back over here a few days ago. There's on say whenever we drew this in. So this has been quite handy. Shout out again to Tony who wanted to see pitchforks as part of the episodes, and well, here we are. Here we have it, and this is how it would work. So let's just change this over now to shift and say instead where were our targets at exactly on this one. Bear in mind I've not moved this as it happens, and you can look right here and see that 12,113 or so area where the prices are 12,110 area where the prices went up to. Bring this in exactly at here at the top of this shift pitchfork. So Schiff was one of was Andrews's like student or something along those lines, attended one of his courses or something, and so it was a sort of Plato Socrates type set up here, and he came along and says, did I explain this by the way? I think already, maybe I did. He came along and says, well, instead of drawing this from the low going through the 50% line on the Fibonacci area, let's go on up and going on up like you do with the original pitchfork, Mr. Andrews. This Fibonacci thing is different here. Whatever. So no need to confuse himself. I've drawn this in. It's slightly differently. Sound whatever. This goes right through the 50%. I need to do it. I need to get the 50% line on there so that you can see what we're talking about. Jeepers creepers, right? So now it makes more sense. Okay, so Mr. Andrews was like, let's just draw this out here. We'll make a pitchfork thing. We'll draw a median line from the low over here, preceding it up through the 50% line of the Fibonacci retracement and going up towards the ceiling, and we'll call this a pitchfork. Yada yada. We'll put lines around it that are of these different distances, out, all equal and all that sort of jazz, and we can extend it out as well as much as we want. Yada yada. And then one of his students came along and says, you know what, Socrates, maybe we should do it like this. And then came up with this one where he said he drew the line coming over from the 50% area over here between the distance of, let me just get this here out, if I can remember this correctly. Bear in mind I might not remember this correctly, so don't laugh at me. Between the 50% line on this Fibonacci, no, it's not that one. Remove on where did I do it? Why did I do it from the top of that candle? What was I thinking there? Yeah, so why did I just do that? Anyway, I'll not edit it out so you can see that we'll do sort of weird things from time to time. Brain fart there, right? From the 50% line on this Fibonacci over here, and drag it down through the way here. And, bearing in mind of the way that these different things could be drawn out, you could have had your You could have had your pitchfork anchored in down over here somewhere instead, with it like that, and that would be the shift pitchfork that we can see here. It depends on where your anchor point for this guy is coming in at, but if we put it in here, yada yada. So anyway, that's why we've ended up with this thing, and we can see if we do start to go sideways and we stall or we plateau in around these areas, we've got different certain targets that we can look to, and we can bring it back in this one that we've been at already today. So 12,120, let's call it. We can call it this part here, the top end of the upper line here at 11,750, sort of line for us as well. We've got this blue serrated line here coming in at 11,500. So down towards below that, we also have now that I've moved that Fibonacci retracement, it comes in at around about where the 236 happens to be at, if you're drawing it in from down there as it happens. If it just to put it down here again, you can see that 236 is actually closer to that 11,800 number. Regardless, actually, if you were looking at this one, you'd say that we're below it, but whatever. I'm going to actually get rid of it because I can't remember where it came from now and don't want to get super confused again, have another one of those brain farts. So yeah, and we're in this triangle. How much longer do we have inside this triangle? Well, it's a 24-hour chart, and there's we could go a bit more. So this could be something that we look at over the next period of the next few days. So that's decent. And looking down the way, where would that take us to? 10,300, or maybe down towards this 236 area first off at 10,900, where we've been before, 10,800 and stuff like that. If that would be a target towards the downside, okay, that's kind of just where this makes sense. It lines up with the lower end of the median channel on this thing, and if we're to go towards the lower end, of course, that's 10,500. So, pardon me, that's what I'm looking at. And in terms of how we've come up here and how this is structured, well, we were speaking about this before, and how if the prices were to go up, where we need to close at, and how that would work in terms of this turning out to be bearishly divergent, and what it would need to not do in order to avoid having that bearish divergence, etc., etc. So the question becomes, essentially, are we looking at those downside targets, or has the price just stalled on the way up? Now, when you think about a plane, if you're in a wee light aircraft and you pull up the way, and it goes, and then it all just stalls at that point and then pitches back down the way. That happens because, you've gone up at too steep an angle, perhaps, and you need to kind of chill out a little bit on your way up. You can still fly at that altitude, you just have to go there a little bit slower. And is that the question that we're asking here with this one? Can this just be considered to be a sort of somewhat kind of not healthy, so to speak, but volatile, because there's a lot of sort of bubbling along in the market, sort of volatility and stuff like that, during a sort of a liquid period, perhaps of the weekend, over to now period, sort of spike, which is just part and parcel of what's going on here. Resulting in a sort of big fake out, if you like, in terms of this symmetrical triangle, coming in at where we've also kind of measured out before dropping back down, and then actually completing the pattern, with therefore the same sort of 50-50 kind of look at it in terms of whether or not we go up or down from later on in it. That could be the case, which is why we're talking about, have we stalled? Are we plateauing here at this particular moment before we climb on up again? Because it's an uptrend. Or would we be looking at these downward side targets as part of the uptrend that we're in, because we've not really had a 30% pullback yet, as we've seen in previous markets, right? But so that's the question, right? That's what we're doing. That's it. We came up here. We spoke about how this would be. It would be bearishly divergent if it were to close higher. Did it actually ever ultimately do that? I don't think it did. So then what we did here was we avoided technically having that bearish divergence, right? So that's your bullish case scenario style chat for you, which you might be saying, look, this is the psychology that we've got. I mean, this is the underpinnings of it. So this is what would justify further upside, rather than just the crazy sort of crypto Twitter style, trading stuff, which is whatever. I don't know. Like, it's not. None of those guys are traders. None of them are. But massive respect to them. Shout out Tyler, for instance, who doesn't like day trading, doesn't talk about it like that. Just is an investor. So isn't it? Different horses for courses. So what we can talk about here is bearing that in mind. Of course, is that we could have these big pullbacks, and that would be totally fine, and tradable eventables. So if we're to take a Fibonacci down there for, just to kind of bring all the show together as we do in our wonderful Rocky Outcrop style. Thank you very much for tuning in, by the way. If you get some value from this episode, be sure to hit that like and subscribe button. And brilliant. Yeah, thanks very much. Really do appreciate it. Really, really, really do. So, share it with your friends. YouTube.com/Rocky Outcrop. But bearing that in mind, if we just wanted to take a couple of, not the URL, you definitely bear that in mind though. But bearing everything we were talking about just beforehand in mind, getting back on track here, we can look and put a Fibonacci up here and say, well, if we were to pull back, what would be 3 or 4 targets towards the downside that we could talk about if things were to kind of go horrific, say things just got horrific. What would that look like as part of parcel of potentially continuing an upward trend, and how would that work together? Because it's Monday, suppose I can talk about this and it makes it briefer throughout the week as well. So this is extra value, I suppose, because this will stand the test of time. So this would be the horrific downside targets, right? As part of a retracement from the start of the current uptrend that we're in, looking back over to, if I just randomly grab Fibonacci's and swing them around the place, looking back over to the 13th of March, coming up to the most recentest of highs, right? So this uptrend, if we were to retrace against that, then what you could look to would be these following numbers, which would be 10,140, bringing in the 236. 10,140. Well, we can bear these numbers in mind as we look at the different sort of, as we take the sort of the final 30 seconds of the video. We've got a minute to go. So then the next one here at 0382 is $8,883. The 50% line comes in at $7,867, and the 618 sort of to 6.65 golden pocket zone is coming in here at 6,851 down to 6,575. Okay, just those numbers, and we'll not get too carried away and look at things like the 786 or the 886 just yet. 5,500 and 4,543. Can you imagine? Wouldn't it be fun to be trading that all the way down? Wouldn't it be though? Just wouldn't it be? Even if everybody goes crazy, I know I might get like loads of thumbs down for saying it, but wouldn't it be fun? Wouldn't it be? Woo! Imagine that. Of course, we're in an uptrend, right? So just balanced, FOMO free, greed free, bias free. We're in an uptrend. This has been great. It's great. Yada yada. Bang those drums. So and join the Discord, by the way, so you can chat. There's lots of good people in there chatting about stuff. So those targets there. Let's just jump on up a time frame, shall we, and put that a little bit perhaps in context and look down the way. So the 236 comes in there at 10,140, and if we look at the weekly time frame, we can see that that's where we had a previous high. So if we were to come, and this is now would be considered perhaps an area where we would want to see the prices stay above if they were to retrace from, say, around about this blue serrated line up there down towards around about, say, the 236. They'd be coming in maybe just shy of taking out this previous high here and continuing then the trend on towards the top side thereafter, where people could look at the weekly time frame and say, hey, these things happen. It's good that it stayed above that price target there, where we had the 618 golden pocket before at 10,140, coming smack bang in the middle of that. From where we are just looking right now, for instance, say that were to happen in the broader term perspective, just throwing this out there. And then if we are in an uptrend, I want to just remind people, so looking at this as well, where's the 382 come in here, this 8,800 area? Well, that's where the 50% retrace level is on this one. Bearing in mind that this particular Fibonacci is where we came up to and touched off of, what did we do here? The 886 did we just about on this one? Did we do the 86? No, we did the 786 on this one. So we came up here and did the 786 retracement on this guy. If we were to, continue a downtrend overall, and if that's what were to happen, ultimately, so then you'd be looking then at where the 786 7,867. Sorry, the 50% line is on the target that we just had before, and putting that in a context, that comes down roughly in between the sort of 50% and the 382 over here, and looking at anywhere in these areas, eventually you get over to this point where you take out the 236 on the big all-time highs to the next big gold swing lows Fibonacci retracement area, which would obviously be dangerous sort of psychological levels. We'd be breaking numerous things along the way doing that, and that would be like that $6,000 area would be staring us in the face that we've talked about so much. Talk about 50% off since the highs, all that enthusiasm gone, perhaps a massive alt season having happened, or maybe tailing off at that point then, or whatever, various things. So I know that probably everybody's probably tuned out by this stage, but then I suppose what's the last one? Where's that golden pocket coming at? Well, that's 6,500 area, and if we look over to the left, we know that 6,500 isn't everything, and around that whole area there, 6,500 has been sort of key in terms of the broad term picture over the longest period of time. I mean, on this particular view, if I were to take the time to stick in the VPVR, the point of control, potentially could come in at this area. There's other areas as well where there's been plenty of price action now, but just looking back the way further, there's a big deal. All right, anyway, we've covered everything we need to cover. Did we talk about whether or not, so suppose I'll just quickly say bye, so that if we can stick in any content at the very end of this, then it kind of constitutes that thing. So yeah, no, did we talk about anything we need to talk about? Sort of where's the lower end of this in at 11,300? That's where the 50% happens to line up with on this particular Fibonacci. If we were to drop down, if it came back down, retested the 618 over there at 11,600 area, is that sufficient? Yeah, it could be. Looking towards kind of continuing this then on towards the top side, what we wanted to see happen. Well, this here kind of gives you a bit of a clue when you're looking at that particular Fibonacci retracement there. If I just draw in another from, say, this low here up to the high, and then I'll say bye-bye. Right, okay, so from there to there, sorry, just see, let me make it a different color. Sorry about this, everybody. Where are you? Give me my options thing. Use one color, white. Okay. 236 comes in there, 11,756. So we're currently just below that in terms of this Fibonacci. So if you did want to have three targets in terms of just off the back of this one, having stayed through this part of the video, might as well take a look at this too. You've got the 382 coming in at 11.5. You've got the 50% there at 11,350, and that golden pocket zone comes in at 11,129. Of course, if we were to extend on down the way, 10,900 to 10,700 is in around that 786. 886, and if you went for a sort of the 1618 off the back of this, it would take you down to 9665, filling in that CME chat over here if that were to all pan out on that direction. Of course, upside targets, who cares? Do people care particularly about them right now? I'm not 100% sure. We talked about everything that we need to know for trading this thing, and the levels where going past them is obviously looking at other things. I think I've already probably spoken about them in previous episodes. Let me know. Join the Discord. You can chat amongst yourselves. It's really, really good chat in there. Really amazed actually by the good chat we've got going on in there. So that's fantastic. I'm really proud of everybody in there. Well done. And yeah, thanks for tuning in. This episode's been longer and all that than I wanted it to be, but I hope it's had a lot of value for people to take away. Kind of really looked at where we are right now in the market, asking all of the different psychological questions and stuff, and setting you up on it, setting it all up for you yourself to take a look at if you want to, in different sort of perspectives. For instance, looking down here and thinking, well, maybe this is, we've come up here towards the top end of this where the 40 is. If we see this pullback from now, then maybe we get that positivity return. This is an area where that could happen out in the 1 hour time frame. Or if that's what you were wanting to look at and combine it with your own thing and think, well, maybe that's it. Maybe this is a good entry for a long or whatever at this particular point. So hopefully that's a help. Hopefully that's a help. What else is there? There's nothing else. I could have talked about these be-anchored VWAP type things and stuff like that. Came in here and touched off of one. It was interesting while it lasted. Anyway, see ya.